Hi everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Wednesday, May 24th, 2023. We did see some selling today, and I'm just showing you the first chart I'm showing you is the VIX. And, as I was saying, everybody seems to get bullish whenever, we're down at support levels and we have buy signals on the VIX. And it's one of the things that I put into, our predictive analytics model. I mean, we go by time, which Woody puts out, and then we have the sentiment, which is really the thing that confirms that the top or the bottom is in. Because if it's at the top, we're going to get extreme bullish sentiment readings, and if it's at a bottom, we're going to get extreme bearish readings. And that's because the majority of the people, they trade off of their emotions. And that's why we're able to take advantage of this stuff and literally, just make kind of easy trades and not really have to worry about things. So the VIX is in my kind of arsenal where, I'm looking at patterns. I'm looking at, a regular of the S&P 500. Obviously, I show you the NIAD all the time. That's one of my biggest ones. And then, the VIX. Where are we on the VIX? Are we at support? Are we nearing resistance? And this, was an easy one where, I mean, we were looking for volatility to pick up last week. It started on Friday and it picked up really the first 3 days of this week. So volatility is hitting exactly when it was supposed to. So if volatility is going to come in, what do you want to do? Do you want to be buying this market, or you want to be shorting it? You want to be shorting it, and these are the things that really we have to, not a lot of traders pay attention to. They listen to whoever is, blabbing about, oh, we broke this support, we broke this resistance, and price, it's a lagging indicator. I say that because, one of the, when we were up here, I was saying my first target is down here. So price was lagging what all of our indicators were talking about. And I'm sorry, that was actually the ES. So when we were up here, the target was down here, the first target on it. And that was once we got through this support. Once we broke through it, I said momentum's going to pick up on the downside and we could head all the way down to the 4100. We came pretty close to that, down to the 4104. But the thing is that that's what I mean by price is a lagging indicator where, we had a 98% bullish sentiment reading. This told me that everybody was in. I'm listening to, a bunch of the talking heads, whether it be on CNBC or Fox or wherever, saying this market just wants to go up in this, and they're looking for the excuses. And you know what, the market is going to go up. I'm just saying at this particular time period, we're looking for, it to move lower, and I'm going to leave the door open for big bounces. And that's why, I took a quarter of my position. We had three quarters full on the short side with SDS, and I took a quarter off at the 15 because this was, this was some support right here, and we went through it. We made it down to the 4104, and now we're coming back up, and we could be closing this gap at 46, or we could come up to this resistance up to the 4163, and even leave the door open for a move up to the 4190 to close this gap. So that's why I layer out. I mean, well, like I said, we did this already when we had, I had half a position and I closed that right at support, let it go, and then I started buying back right around right where we were in this area, and then took another short up here. So we made almost, I think, 65, 75 points on the S&P on this move. Now we just made almost 100 points on this. So we have a lot of wiggle room, meaning that we have half a position right now. If it goes up, we just be patient. We've already locked in 150 points on the S&P with two different trades. We're holding on to some. We're 50 points in the money on one, and we're pretty much dead even on the other. That's where I got in at the 4112. So, we have the luxury of just letting the market do what it's going to do. I took a quarter off. Hey, if the market wants to go back up here, I'm gonna buy back my the shares that I closed with SDS, and just take it from there and keep doing this. with each bounce, because we know when when the low is expected. I put that in the report. You guys should have a very good idea. So what are we going to do? We're going to allow for these big, short covering rallies. Hopefully we'll be, either just have a quarter position or be cash, but we're not going to buy. What we're going to do is we're going to wait for that bounce to exhaust itself in short. We're going to stay in the direction of the trend until we're scheduled to make a bottom. And everybody's going to be, looking to buy dips, and they're going to be the panic sellers. I've said this. It happens month in and month out, and it's why our predictive analytics model has been so successful. As I said, it's going on 2 years right now that can't think of the last losing trade we had. And once the Fed got out of the way, that's when things really got easy for us, because when the Fed was there pumping money into it, we were just making these irrational moves that wouldn't stop, and nothing was working as far as being on the technical side, and everybody looked brilliant, just staying long, and now they have to think, and unfortunately, a lot of these people don't really have any idea how to how to actually trade, and the only thing they're doing is buying, and they're going to end up, if we take a look at the, let's just say, the daily chart here. Hang on one second, my okay, so here, um come on, make the move. Okay, so if you just take a look at this and say, anybody that's just been buying, look for the big ramp up, we've gone absolutely nowhere. Even the people that have been shorting, looking for the crash, we've been in and out of this market a ton. And the thing is that anybody that's looking for this market to crash or looking for the new bull market, they're going nowhere, and we're making money, each month on this. So you can see the support 4101. This is the 50-day moving average. If the bears can push it through it, we're going to have a reaction trade down to the 40-40. Below that, then we start closing some of these gaps at 39.77. And eventually, my downside target, which I believe we're going to come to, is going to be somewhere down at the 3,800. Most likely that's going to be in the time period that we're looking for the low. Everybody's going to be bearish on the market, and we're going to make the easy money on the upside, just like we do each month. So right now, again, if the bears can push it through this, we should see a quick move down to this 40-40 level. That's where I'll take another piece off. The bulls, they have a lot of work they have to do here. First thing, they got to get above the 40.52, but really more importantly, the 40.62. If they do that, then they're coming up and closing the gap at 41.88. So again, close to half a position, leave the door open for some kind of bounce tomorrow. But the 15-minute chart right here is saying that these lows are going to get taken out, but don't get lured into getting bared up, because this is some major support right here. And if we take out these lows, we're actually going to have some pretty good buy signals on the 15s. So I'm anticipating that we're going to start closing some of these gaps. And again, all I'm going to do is, just buy the SDS shares that I, the sold, and just continue to do it, because hang on one second. My charts froze up, but I was just going to show you the SDS, and from our where we got our last entry, it was a 5% trade in 2 days. We made almost 3% on this one. So right now, just like I said, let's just keep ringing the bell, collecting money, and reshorting this market until we get into the time period where we're going to be looking on the long side. So with that, have a great night, and I'll talk to you guys in the morning.